All right, so overall, obviously a really good day for the bulls. Daily chart, we have a very strong bull breakout so far of the June all-time high. We formed a triangle, we had a bull trend, contracting triangle here, and we ended up obviously trying to break out to the downside in late July. The bears failed to get a breakout of the triangle, and we ultimately reversed up pretty strong. So far, I think this rally is good for the bulls. It increases the odds that we're going to get some kind of second leg up. As far as always in on a day like today, there's basically there's no good always in. And I talked about this the other day. It's really important to figure out how to reduce the number of decisions that you're going to make in a given day. And at some point, it's important to reduce the number of decisions that you have to make. At some point, when you're looking at this, you have to look at the market and think to yourselves, okay, it's always in long. What are my choices? The only choice is to either be long or flat, and you just can't sell. And if you can think about it that way, even if you think the market's really climactic, then the benefit is you're going to reduce really important decisions that you have to make, and you'll reduce decision fatigue. When you look at the market, it's really common to think that this can't go on much further, therefore it's got to pull back, and I'm going to start selling and scaling in because it's natural for humans. We have this natural thought that the market's just going to plummet to the downside, when in reality, when you break to the upside, and especially when the market looks like this on the daily chart, breaking out of a tight trading range, the odds are against the market just getting a strong reversal down. You get it. It's a tough day when it's easy to look at the market and just think, oh, there's no way it can go higher. I've got to sell. So bar one, we gapped up on the open, and it's relatively big bull bar. Give me 1 second here. In general, 20% chance bar one is going to lead to the low of the day. But with the gap up, maybe it's closer to 30. And then we got to follow through bar one too. Good for the bulls. Still probably a trading range open, more likely than the start of a bull trend. And then 3, doji, probably buyers below and sideways. And then 4, we got follow through. This is good for the bulls. Increases the odds that we're going to get some kind of second leg. So another bull bar on 5. Now we're obviously trying to form a trend from the open. 6, we have a doji, but not a good sell, probably buyers below. 7, another bull bar. What about a parabolic wedge? 1, 5, 7. I don't think it is. I think it's a bad parabolic wedge. It's a breakout on a higher time frame. And you have to be thinking, because of the gap up and the context on the daily chart, we may be trying to get trend resumption for the bulls. 8, another bull bar. Now we have consecutive bull bars, 7 and 8. Good for the bulls. Makes me think we're probably going to go at least a little bit higher. 9, we have 3 consecutive bull bars. You can argue it's climactic and parabolic, but it's a breakout on a higher time frame. And so far, the rally is strong enough that whatever reversal down we get is probably going to be minor. 10, another bull bar. Good for the bulls, always in long. Probably going to go at least a little bit higher. Then we got a pullback on 11. What about selling it? No way. It's the first bear bar in the whole day. And therefore, there's probably buyers below. There's always the risk of a strong downside breakout. Realistically, because of the context, I suspect the downside's limited. 12, doji, not a good buy, not a great sell below. And therefore, traders will buy and look to buy more lower. 13, we have an outside out. It's basically a small two-legged pullback. We sold off on 11, paused on 12, tried to sell off on 13 and reversed up. So that's good for the bulls. And then 14, we have a doji, not a great sell, probably buyers below. 15, bull bar, good for the bulls. Makes me think we're probably going to go at least a little bit higher. Whoops. 16, another bull bar, still probably buyers and buyers below. And then 17, doji, still same thing, not a good sell. And until the bears can get more signs of strength and more selling pressure, odds are against a strong reversal down. 18, bull bar still probably going higher. 19, another bull bar, good for the bulls. I still think always in long and likely to go higher. And then 20, doji, probably buyers below. 21, bull bar, makes me think sideways to down. Sideways is most likely. If we do get a reversal down, it'll probably be minor and find buyers. 22, bull bar. What about selling it, betting it's climactic? These bars are too small. And whenever you get small bars that are in a tight channel, it can last for a long time. And because of that, selling is relatively dangerous. 23, consecutive bull bars, 22, 23. Good for the bulls. Makes me think we're probably going to go at least a little bit higher. 24, bear bar, not a good sell, probably buyers below. 25, doji. I still think the downside's probably limited. And then 26, trying to break out to the upside, good for the bulls. I still think we're probably going to go at least a little bit higher. 27, follow through, good for the bulls. Consecutive bull bars, 26, 27. And then another bull bar, 28, with 3 consecutive bull bars. We're still always in long. And at some point, odds favor a test of the moving average. But until then, I don't think the market's going to pull back all that far. And because of that, I think the downside is likely limited. 28, another bull bar, but buy climax here, buy climax here, buy climax here. Again, odds are we'll touch the moving average, but downside risk limited. Bear bar, 29, good for the bears. You can argue parabolic wedge, you can get out of longs, but downside risk is probably limited. Bull bar, 30, high one buy, not a great buy. Probably sellers above and sideways, but not a great sell either, so downside risk is limited. Follow through, 31, and then you can see we got a second entry sell, 32, and then a bear bar, 33. But this is basically the closest we've been to the moving average all day. And even if we do get a bear bar, 34, what do you think is going to happen? The odds are there's probably going to be buyers not far below the 34 low. 35, bull bar, good for the bulls. Probably going to go at least a little bit higher. And then 36, 30. 35, 36, we have consecutive bull bars. I still think buyers below and sideways. 37, outside up, bull bar, good for the bulls. But, again, even if we continue to climb higher, still probably going to be buyers. And what do you do at 38, 39? It's a bull bar. And you argue it's climactic, sure. But even if we do pull back, what's going to happen? When you look at this kind of day, you've got to think about it from the perspective of what would it take for me to short? And the problem is selling above bars is extremely difficult. And if selling above bars is extremely difficult, what do you think selling below bars is going to be? It's going to be even more difficult. And that lowers the probability of a downside breakout. More follow through, 40, but probably going to pull back. And then doji, 41, again, which is really not what you want to see. 42, bull bar, and then a surprise 43. What about, is 43 climactic? It is. And every new breakout we get increases the risk that we're going to test back to one of the lows. Doji, 44, good for the bulls. Bull bar, 45, and doji, 46. I suspect the odds are we're probably going to pull back. And 47, bear bar, probably sellers above and sideways. But we can easily just keep drifting sideways to up. And obviously, you can see that's basically what we continued to do. We have a second entry buy, 49. It found buyers. We went higher on 50. Follow through 51. More follow through 52. But what do you notice about this rally? It's a little bit more climactic than any of these. At some point, we're going to fall below a bull bar on a higher time frame, which means we're going to fall below the most recent buy climax. And that increases the odds that 51, 50, and 49, it's the most recent buy climax. That increases the odds we're going to test below those bars fairly soon. Bear bar, 53, good for the bears. And then follow through 54, probably going to go at least a little bit lower, 55, doji. What about buying down here? There will be buyers down here. Then we got a bull bar, 56. What about buying it? It's probably okay of a buy. One of the problems with 56 is we have not touched the moving average all day. We came really close to the moving average, 55, and now we have a 5-bar bear microchannel. That increases the odds that we're probably going to touch the moving average fairly soon. Then 57, bull bar, 58, doji, probably buyers below. And then we started trying to go sideways right here. The market's deciding, are we going to reach the 52 close or the 52 high? Or do we first have to touch the moving average? And then obviously we touched the moving average 63, but now it's 2 legs down in a fairly tight bull channel, not a great sell. And then obviously we rallied, we rallied back to the highs up here. By 72, we formed a bear bar, but at this point, it's so late in the day, and every bar, we haven't had a close below the moving average all day. So if you really want to be the first person to sell right at the moving average, not really. And then, obviously we closed below the moving average later in the day. 76, bear bar, failed breakout above the 52 high. Can you sell it? I don't think it's worth selling just because it's so late in the day, but it's reasonable to think you're going to get profit taken. And then that's obviously the end of the day. Really good job by the bulls. I thought today was probably going to have to pull back after yesterday. I thought more likely, we may try and instead of traders buying the close, we may pull back 50%. Let's just see what happened overnight. Okay, you can see we gapped up overnight, and 28.25 is the close of this bar, and you can see the low of this bar, 29 even. So we didn't even test the close of this bar. So anyways, as far as stop orders on a day like today, you basically buy above any of these bars, and once the market starts to form a small pullback trend, it's basically buy below anything, betting that the market's going to form higher prices. That's good for the bulls. And bulls, they can buy above 1, they can buy above 4 or 5. They don't have to get out below 11. They don't have to get out below 24. If they do, they buy again above 26 if they're really determined. If they get out below 32, they buy again above 34. And if they get out above 37, if they get out below 32, they buy again probably above 34 or a new high of the day. And at this point, I think it makes sense to get out up here. But even if realistically, even if you don't, the market's probably just going to go sideways. So it's not a great sell. By the time, if you're long, and then by the time you get 2 or 3 bars down, odds are you're going to bounce. And then at this point, I would not be long or short. And if I was long, I would definitely get out below 76 for limit orders. You can basically buy below anything in here. Buy below 10, buy below 9, buy below 12. And anywhere in this, at this point, you can buy bear bars, you can buy below bars. Tough to do, but that's kind of reality. What's very interesting about a day like today is you can see, just how little pullbacks you get. Lots of micro channels here. We had a micro channel. We had a 10 bar micro channel here. That's really fascinating. So we had a 10 bar micro channel here. We had another 10 bar micro channel here. We had a 4 bar micro channel here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Someone tell me in the comments if I'm wrong. But we had a 10 bar micro channel here, another 10 bar micro channel here, and then a 14 bar micro channel right here. And that's a very, very strong buying pressure. So for buy the close, sell the close, close your eyes and just buy when, don't even look at the chart and just buy something small. They're kind of joking, but just anywhere in here. You see bar 5, buy the close, buy any of these bars, buy the reversal attempts, just buy anywhere. That's what traders are doing. Let me tell you the questions. Yeah, someone said you pinch your nose and buy. That's exactly it. And someone asked about leg counting. Today's a really good example of when it's bad to count legs hoping for a wedge top, because the leg count just keeps getting reset. All right. Hope everyone has a good rest of their day.